All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's go out and do this. We have the challenge here, and we have two positions on the board right now. And let's get the pricing in: 207 and 83. So let's get those filled in here. All right, so we're down about 300 on Halliburton, up about 370 on the additional GOLD. So GOLD just continues to keep on rolling here for us. It puts challenge. We're 200 shy of 6,000. Kind of the technical first double there for us. Halliburton, it's not going our way, but we're still away from the exit level there, so don't have to adjust anything. And then with GOLD or Barrick Gold here, we still have about 50 cents to get to the profit level here for it. So hopefully tomorrow. Hopefully tomorrow would be nice. So anyway, that's holding both of those. We still have 2,800 in cash that we can put into play, and going to put some of that into play here. We have two entry triggers on the board here this afternoon, and they're essentially the same trade. So I'm only going to trade one of them here, and those are JP Morgan and Bank of America. And both are triggering bullish here. And they're same chart, same story. Here's JP Morgan's chart. Nice little sell-off yesterday leading to the upside crossover today. Bank of America, same thing. Just very similar action. I'm going to go and buy some JP Morgan. And for one reason and one reason only. Yeah, we got into JP Morgan a little while ago. Right back here on the 4th of February, right? 4th of February, we got a nice buy signal. And, okay, great, it made us a little bit of money, but we had to get out with the time stop. And, it's just pretty much gone nowhere since then, right? But now it's given us a sign that it's ready to move again. I want back onto that train, back onto that story, and so going to jump onto JP Morgan instead of Bank of America. The options are not that different. We're not talking about a decision where you go, wow, this is, one way or the other. It's a massive decision here with it. All right. So I'm going to do 9 contracts of the 20th of March, 140 calls. All right. 9 contracts of the 20th of March, 140 calls. And $1.94 is my fill price. I just did a market order there for it. And let me just make sure the alert gets out here, and we can go and fill things in here for it. Bid ask is moving down already, so good. Hopefully I get the high fill price. But the 20th of March, 140 calls here for JP Morgan on 9 contracts. Okay, there we go. And the stock is at 137.95, so we'll get that in here. There we go. Good. All right. Let's do it. JP Morgan. Today's date 2:19 p.m. and we are in the 20th of March. 140 calls. And fill price on those was $194 on 9 contracts. Okay. Now our average true range here is 206 here for JP Morgan, which is going to give us a. Let's copy this one there. There we go. Which gives us our profit level, 142.07. So that would be a new high here for JP Morgan. 135.89 is the stop level there for it. And we'll get it so it gives us a semi-price there. And then our auto exit date is going to be the 24th, 224, and 226. So 224 and 226. Okay. So that puts about 1,700 in cash into it, a little bit more than what we put into Halliburton yesterday. Yeah, I went a little light on Halliburton yesterday, and yeah, but anyway, there we are. We are in and off and rolling here with some JP Morgan calls, and yeah. All right, we're good. All right. Alrighty. So pretty straightforward, in terms of the trade. 135.89 profit level. You can see that's kind of, right, that gets into yesterday's price action, there, and kind of near yesterday's lows, kind of breaking the 20-day moving average, or, if that were to happen. And then on the profit side, we're just talking about just going into a new high, and it doesn't have to make that big of a new high here with it for J.P. Morgan to really do us some justice here. So that gives us three positions, right? GOLD and J.P. Morgan are our largest positions, and then Halliburton, how things are positioned right now, is a little bit smaller, but Halliburton's coming up on its stop level. If it were to strengthen tomorrow, I'd probably have to just back on out and take a loss and move on here with that. Hopefully, pulls on back. We have oil, which is up over 2% here today. Oil's having a big update today. And some of the energy components are, but energy in general is kind of lagging a little bit, the price of oil. So we'll see. We'll kind of see how that plays on out. Now, again, the price of oil and all of those other things, they don't really matter when it comes to the trade. The price levels and the signal, great, running with it and go. If you want to trade Bank of America instead of JP Morgan, I get it, right? I get it. And it's just very similar in terms of the setup here. The options that I was looking at for Bank of America were the 34s. And one of the reasons I almost did those was because they were in the money. With JP Morgan, I'm out of the money, right? So, I did look and say, well, should I trade the, in the money options versus the out of the money options? But ultimately, it's not that big of a difference. And, I wanted back on the JP Morgan story since we had already traded that earlier this challenge. Okay. The overall market conditions, we're still looking at, the bulls in charge. Bullish percent index, still continuing to climb here. If we look at the number of stocks above key moving averages, like the 7-day moving average here, you can see we have, 60% of stocks above the 7, which, you go, well, market's at all-time high, 60%, that's not very big. 70% are above the 20, right? And you're right, it's not a huge number. It's a healthy number, but not an overbought number. And I think that gives the bulls a little more value, a little more credence there. Number of stocks hitting new highs on a day-to-day basis continues to be healthy. And so no real danger signs for the bulls. We have a little bit of divergence in some of the areas like small caps, a little bit of divergence in the transports, and we've talked about that many times. There's some divergences out there, and yeah, they can be warning signs, but they're not predictors. And so far, those divergences have given the bears pretty much nothing here overall. We still have the coronavirus going on, and the various reactions to that, so that's going to be a continued ongoing story. But we're through the meat of earnings season here in the U.S. If we look at Econo Day, Estimize here, we can see that there's still some to come, right? And if we come up to the calendar, we can see that after the bell today, we're going to have a few. Zillow Group, right? Cheesecake Factory, okay, IMAX. These aren't big market movers. They're individual stocks, and we'll still have a bunch of these coming out tomorrow. Domino Pizza for solar, but none of the big massive market movers. Deer, will be coming out here, but yeah, that's about it. So earnings season pretty much on the tail end, on the fizzle. Here with the market, we are seeing a lot of European earnings coming out right now. And then today we had the FOMC minutes that came out about 40 minutes ago. And if I come in here to the market, you'll notice there's not a huge reaction here with it, with the FOMC minutes. Let me just pull up the ES here, S&P futures. So we had a little blip down, a little blip up, but very small reaction to them. And considering the reaction that we got to the Fed when they had their original announcement, it's only fitting that we see a small reaction this time because, we didn't really get much of a big reaction to the Fed last time. And, it tells you the market is kind of put the Fed on the back burner and isn't looking for the Fed to do a heck of a whole lot. And, big decisions are not being made around Fed policy as it stands. All right. Thanks for hopping on. Have yourselves a fantastic afternoon, and we'll talk to you tomorrow. Take care.